welcome to CMA Part 2. This is the first lecture of the session. Very interesting session and very useful. I personally feel that all accountants, management accountants, they should be well familiar with the ratio analysis because it is really practical. So I will explain you what is a ratio analysis. What does this ratio mean? So ratio is always between two things. There is an upper value, there is a down value. We divide them, so we say it is a ratio, and every ratio give you meaningful understanding to a particular scenario. So what are these scenario situations names? This is I'm going to discuss shortly. So today our things to learn are very dense and very, very attractive and very useful. We'll start with something called common size financial statement, which is in part 1. There's a bit of discussion. First 3 units are about financial statements. So I assume that you already know about assets, liabilities, equity, current assets, current liabilities, profits, profit after tax, before tax, GP, gross profit, your current liabilities, non-current liabilities. So common size, we will see how it works. And what should be a quality of a ratio analysis means, can we depend on the ratio analysis? It's like the same question, can we depend on a blood report showing our hemoglobins and your white blood cell, red blood cells, all that. So we will see what quality is required so we can make our opinion on it. And we will see the liquidity ratios, calculations, effects on transactions, profitabilities, and then factor affecting your profitability, solvency, leverage, and what are the effects of off-balance sheet financing. You should know that the first 3 chapters are almost similar. So I combined them in this presentation, and if we are able to finish, it's fine, because previously it used to be 1 chapter. Now they make it 3 small chapters. So I prefer to go topic-wise. So I combine all of them. So let's see how comfortably we can finish them. So let's start with common size financial statements. What are those? So first of all, I will give you an example. Suppose if you tell me your salary is 50,000 dirhams a month, so it will look good, but my question, my mind will start a curiosity that what is his or her expenses? Maybe her expenses are 60,000 a month, and her salary is 50,000. So if you see 50,000 alone, makes good sense. But if you see with the expenses, you can see it's a very disastrous situation. So there came a concept of common size financial statement, means that we show the figures into percentage. So for example, if I say my salary is 30% for my expenses, 200% of my expenses, my rent is 20% of my salary, will make more sense for you, right? But if I say only my rent is 10,000 a month, so you will think like, then what is his salary? What are the other expenses? So this is something that is really important. As I told you, that common size will show the percentage to the sales, and it will be really useful. We can easily understand that what's going on. But if we show just a figure, that's not going to work as a comprehensive analysis. So he says that analyzing the financial statements of steadily growing firm of different size within industry presents certain difficulties. So first of all, you can compare apple with apple, mango with mango. So never compare a small company with a big company. Even don't compare an American company with a British company, because they are in two different zones and two different business environments. So item on common size financial statements are expressed as a percentage of sales or total assets. So you can say that balance sheet is just one minute. So balance sheet is you can say that I have 20% of the expenses, 30% of expenses, or you can do this way that my expense are 40% of gross profit. So that's the way we will see the common financial statements. Now there is one example in front of you. So you can see here it is 1.8, 1.6 million. These all are the figures. It doesn't show me anything. I need to see and analyze, but if I want a fast and quick decision making, which as a CMA, we have to produce those reports, which will bring value for the shareholders. So this is one of them, that you can see that our cost of goods sold is 91.7% of the, you can say the sales. So I will say this is a disaster company. This is a disaster. This is a disaster because ideally, if I don't have left, my GP is 8%. So how I will pay the rent, salaries of the staff and other people, right? So very important for us as a decision maker that we should know. I suggest always deal with the products which has GP more than 50%, 60%. That is a better sense of value that we can get out of it. So I'm giving random thoughts. We just started the lecture, but because all of you are accountants, so ideally these percentage presentations in balance sheet, income statement is now the talk of the town, and this is the benchmark way to deal with board of directors and others. Now, in terms of GP, you can see 8.3. I can see their selling expenses are 2.8%, which is very less, and we can see their net profit is 2.3%. So maybe if I am advisor of this business, I can tell them, stop doing this business and give me money. I'll put in Bitcoins or maybe cryptocurrency. I can make you 20% profit for your investment without doing anything. So because, in financial management, we need to learn that how to optimize our returns or return on investment. So that's a core skill for a CMA while studying the part 2. So I guess that you might felt what is the relevance and importance of showing figures in percentage. That is called common size financial statement. So this is a very important dimension. Now I can see, if I see your assets are, if you tell me my assets are 1.8 million, so I will first thing, what is your liability then? So here, if I see, I can see your assets, current assets are 42.2%, 57. So it makes quick sense. Current liability is 21%, non-current 39.9%. So I can see that your total liability is 55.6, means you're a high leverage company. Your liabilities should not cross 50% minimum, because that means you will be unable to sustain your existence. So this will study in leverage ratios, but I'm just trying to explain you that the common size financial statements are the best, and we should use them in our analysis. Okay, so let's go ahead. And he says that there are two types of analysis. There's a concept known as horizontal